Well, good morning, everyone, and welcome to our webinar series. We are extremely happy to have MNP with us this morning to take us through some of the myriad of things that are happening with respect to the programs that have been developed by the federal government. As I mentioned, we're really happy to have MNP with us today. MNP is a leading national accounting, tax, and business consulting firm in Canada. In their commitment to supporting Canadian business owners and communities, MNP created the COVID-19 Business Advice Center to provide timely insights and practical solutions to help organizations navigate uncertainty brought about by the pandemic. MNP is dedicated to helping businesses adapt to this evolving landscape, with experts across the country closely monitoring the rapid changes and providing content that is up to date and relevant to businesses and our communities. Presenting today, we are extremely pleased to have Jacob Angemeer. Jacob is a Canadian tax partner working out of MNP's Mississauga office. Jacob specializes in estate and succession planning, working closely with business owners to develop strategies that best suit their short and long-term objectives. He also identifies other planning opportunities to optimally structural and organizations' business activities to minimize their tax burden. And he joins us today. And I know that everybody will virtually put their hands together and give you a big welcome. Thanks, Jacob, for coming, and it's all over to you now.
Great. Thanks, David, and thanks to the Mississauga Board of Trade for hosting this webinar session. Just going to share my screen here. So I'm going to go through a number of the government programs that have been introduced, and just some housekeeping. If you do have any questions throughout the webinar, please use the Q&A function through the webinar system, and I'll try to answer as much as I can as we go. I do have a lot of content to get through, so if I don't get to any of your questions, I will go through them afterwards, and we'll find a way to get you your answers afterwards. So as David mentioned, MNP's we're the fifth largest accounting firm in Canada. We have offices worldwide, and we really focus on, Canada-wide, and we really focus on the mid-market, kind of small to mid-sized businesses across Canada. So as I'm sure most of you are aware, these last few weeks, or over a month now, has been pretty crazy times, and there's been constant changes and constant incentives that have been introduced by the government, and it's always changing. Trudeau comes out almost every day, and something new seems to happen every morning. After this presentation, there may be more information that's not captured in this because of an announcement made today. It's just it's changing so rapidly, and what I'm going to do my best to do is just go through what we know so far, highlight what's out there, go through each program, and try to answer any questions that you may have as we go through. So the first kind of big initiative that was announced back in March was that many of the tax filing and payment deadlines have been extended. So this list is pretty much all encompassing for things in Ontario. I'm not going to go through each one of these in detail. At a high level, any individuals or corporations that would have owed tax after March 18th, that balance is now deferred until September 1st. So any 2019 tax returns, the payment doesn't have to be made now until September 1st, and interest won't apply. The personal tax filing season usually it was supposed to be over yesterday, April 30th. That has been extended until June 1st. So there is an extra month to file those returns. Corporations also have an extension until June 1st if their return was due before that, between March 18th and June 1st. One thing that's important to note is that if you have payroll taxes that you're paying, that has not been deferred. So you still do have to make those as usual. GST, HST has also been deferred. Any payments due in March are now owing in June 30th. WSIB and EHT have also announced their own deferrals. So pretty much every form of tax except for payroll taxes has some sort of deferral. So I encourage you to look into this a bit further and see if any of these apply to you so you can manage your cash flow. Now, the bulk of my presentation is going to be on the wage subsidies that were announced for businesses who employ people. This is, I think, the most complex legislation in the most detail. So it does take some time to go through. Again, if there's any questions, please use the Q&A and I'll try my best to elaborate. The first one I'm going to go through is the Canada Emergency Wage Subsidy. This is the 75% subsidy that's been talked about quite a lot in the media and through the press conferences from Trudeau. So what this is at a high level is up to the EI maximum insurable earnings, so the 58,700, you can get back 75% of the wages normally earned by employees, up to a maximum benefit of $847 per week if you meet certain criteria. The eligibility period right now is for 12 weeks, and it's split up into 3 4-week periods. I'll go into more detail a bit later on that. It's from March 15th to June 6th. And as I mentioned, this legislation is very complex. There's a lot of different rules to go through. I'm not going to be able to go through everything in detail on this webinar, but I'll go through as much as I can so that you can at least know to kind of go to your professional advisors and see if you qualify for this, go through the tests that are necessary. I think I'm going to break this down to 2 parts. So the first part is, how do you actually calculate the subsidy on the wages that you're paying, and what's the amount of the subsidy? And then the second part is, who actually qualifies for the subsidy? So that's going through the revenue decrease tests that are required to actually claim it. So first we'll go through who qualifies. At the outset, you have to be paying an eligible employee and you have to be an eligible entity. That's a very broad definition. It's essentially anyone, an individual employed in Canada who has not been without remuneration for 14 or more consecutive days in the qualifying period is eligible for this subsidy. That 14-day test has to do with the Canadian Emergency Response Benefit, which I'll go through a bit later. That's the $2,000 a month payment that individuals are entitled to. The reason for that criteria is that they don't want individuals claiming the CERB, they call it, and also being able to get a wage subsidy and being paid as usual. And in terms of the employer's side, it's really broad as to who can claim it. Anyone with a payroll account number as of March 15th, so you do have to have had a payroll account number before this program was introduced, but it applies to anyone who has that number, who's an individual, a trust, partnership, corporation. The only items that are specifically excluded are public bodies like crown corporations or universities. So the formula to calculate it, it's made up of 4 components. Component A is the main formula, which I'll go through and show you an example. The other 3 parts, B is the 10% temporary wage subsidy. So what this is doing is that if you are entitled to both the 75% and the 10%, you can't get more than the 75%. So any of your claims under the 75% subsidy have to be reduced by the 10% subsidy if you're eligible for that one, which we'll go through in more detail. If you have any employees on a work share program, any benefits that those employees receive also reduce the amount of subsidy you can claim for that employee. And the final part of the formula only applies if you have an employee that is on leave with pay, and I will go through that as well. So part A of the calculation, to actually calculate the gross amount of the subsidy that you're claiming, it's very convoluted. I'm going to kind of skip this detailed calculation and just go through the actual numbers to give you an example as to how this formula works. So take an example where before the crisis, someone had a remuneration of $2,000 per week. And now, because of reduced hours, there's not enough work, the business owner has decided to pay that employee only $750 per week. The way you look at this at a high level is you take 75% of what the employee was paid before, so that's $1,500. You compare that to the maximum of 847 that you're entitled to. So in this case, the 847 is less, so you're capped at 847. And then the final comparison is you look at actually what you've paid the employee, because you can't get a subsidy for more than what you're paying the employee. And in that case, it's $750. So in this example, you actually get a subsidy for the full amount of the $750 that you're paying this employee. So this is just a good illustration that even though it's called a 75% wage subsidy, there are situations where you may actually end up getting back the entire amount that you are paying an employee. So how do we figure out what eligible remuneration is? You really start with most things that are on your T4 income. So if you're reporting this on a T4 to an employee, it can't be a contractor, it has to be an employee that gets a T4. Generally, it's included. There's some specific exemptions for stock options and things like that, but generally normal salary is included in this calculation. It's based on pay in respect of the particular period. So the first period that I'll go through is March 15th to April 11th. It doesn't matter when you actually pay that salary, it just has to be salary in respect of those 4 weeks. And the new clarification that was released last week by the government, if you've laid someone off or furloughed an employee, you are eligible to claim this subsidy retroactively if you decide that you want to rehire them and retroactively pay them. You do have to otherwise meet the criteria, and you have to actually pay the employee before you claim the subsidy. And you do have to consider the interaction with the CERB, the $2,000 a month. If an employee has claimed that, they might be required to repay that if they've been hired retroactively. So it does have to be looked at on a case-by-case basis when you're considering doing a retroactive hire. So what does it not include? You cannot include things like dividends to shareholders. As I mentioned, this 14-day test, if you haven't paid someone for 14 consecutive days in that period that you're applying for, you cannot apply for the subsidy. Another criteria that some anti-avoidance rules that they've put in is that if you can reasonably be expected to be paid or returned the salary, you cannot claim this amount. So what this a lot of times is getting at is when you're paying a shareholder, sometimes the owner of the business will put that money back into the company as a shareholder loan. Technically, under this criteria, you wouldn't be eligible for any wages paid that the shareholder has loaned back. So it does actually have to be money that you've paid out to the employee, and the employee has kept that money. It's not coming back to you in any way. Another anti-avoidance rule really deals with temporarily bumping someone's salary just to get a higher wage subsidy. So if you start paying an employee more than what you were paying them before, and then after the subsidy period is over, you reduce their wage back to what you were paying them before the crisis, that top up that you've done won't be eligible for the subsidy. If this is a normal raise that you'd be giving to someone, and you keep that pay increased going forward, then this anti-avoidance provision would not kick in. So I've talked about this baseline remuneration or pre-crisis earnings, and there is a formula to calculate this. And what this is your average weekly remuneration paid during January 1st to March 15th, 2020. And this one is actually for amounts paid during that time, not in respect of the period. So the test is a bit different. And you can exclude any periods where you haven't paid an employee for at least 7 days consecutively. So that can be excluded from your average calculation. You again have to pay this by an eligible entity, so to an eligible employee. So the same rules apply for calculating this baseline remuneration. And for non-arm's length employees, so this actually relates to the question that I just got here. So I'll just answer that question in a second here. So non-arm's length employees, the subsidy can never exceed 75% of the baseline remuneration. So the question was that both my husband and I are employees of the company. Can we include our salaries in this subsidy claim? So the answer is yes, but there is, because you are non-arm, I'm assuming you're also the shareholder of the company. So if you are shareholders, then you are considered non-arm's length, you're related to the company. And in that case, you have to have had a baseline remuneration amount. So if you were paying yourself salaries from January 1st to March 15th, then, and the average of that, the maximum you can get is 75% of that, or $847, whatever is lower, but you can include those salaries to owners in the calculation. It's just restricted more so than an arm's length employee. And I'll talk about the CRA calculator in a little bit as well. It does a good job at, you can specifically indicate if someone's non-arm's length, and it will modify the formula for you, so you can make sure that you're only claiming what you're entitled to. Another question is, does it include vacation pay? Yes, any amounts that are actually paid to the employee, that would, including vacation pay, would be included. Vacation time accrued wouldn't count, but actual payments of cash to an employee would be included as part of the calculation, because that's T4 income that goes on the T4 as part of their employment income. So that was the kind of formula, the part A of the formula, which is calculating the gross amount of the subsidy. And as I mentioned, that has to be reduced by any amounts you're entitled to under the 10% subsidy, which I'll get to, and any work sharing benefits the employees have received. Part D of the calculation is relating to the employer portion of the CPP and EI. So you are able to add this to your subsidy claim if you have an employee who would otherwise be eligible for the subsidy and they're on paid leave. So really what that means is you're paying them, but you're not expecting them to do any work. They're at home, they're not working for you, but you continue to pay them. You can also get the CPP and EI employer portion back as part of your claim. You do still have to remit these portions. It's just included in your application to get this refunded afterwards. So there is still a cash outflow, and then you have to apply for the subsidy. So as I mentioned, there's 3 qualifying periods. The first one's already over, so this one you can already apply for from March 15th to April 11th. And this is now getting into how do you qualify and the revenue reduction that is required. So for the period of March 15th to April 11th, you have to demonstrate that you have a 15% reduction in revenue for the month of March. And how you look at that revenue reduction, you have 2 choices. You can compare March 2020's revenue to March 2019, or you can look at the average of January and February 2020's revenues. Once you pick a particular comparison period, you have to stay consistent for every other qualifying period. And period 2 and 3 are very similar. The only difference is that the revenue reduction requirement is 30% instead of 15%. And the reason for that is that they recognize that the crisis really didn't start impacting most businesses until mid-March. So they relaxed that criteria for March to 15%, but you do have to meet a 30% decline in the other 2 periods. One interesting rule that they have brought in is that if you qualify for one of these periods, you meet the revenue reduction test, you automatically qualify for one more period. So what that means is if you meet the revenue drop of 15% for March, you qualify for period 1, and automatically qualify for period 2, regardless of what your revenues are in April. They don't have to meet the 30% test. You do have to qualify again for the third period in May. So it's only, you get one extra qualification regardless of your revenue drop, then you have to requalify. You do still have to reapply every period for the subsidy. Just one question that came up is the subsidy available for newly hired employees? So yes, it is. They have to be arm's length, so it can't be someone related to a shareholder that controls the company. That in those cases for newly hired employees, you'd be restricted to 75% of what you're paying them, to a maximum of the $847, but you are eligible to claim the subsidy for them. You do have to be careful about that 14-day test as well. If in that 4-week period, there's 14 days that you haven't paid them because they weren't hired yet, you would only be eligible to claim them for the next period. So say you hired them April 1st, there would be a period of 14 days before that where you didn't pay them in period 1. So you would only be eligible period 2 and onwards. Another question, the question is that if a business receives the Employment Ontario wage subsidy for new candidates they hire, do they qualify? I'm not 100% sure on the mechanics of that subsidy. What I can comment on with that one is that there is that rule for it to be eligible remuneration. No part of the salary can be returned to the employer, sorry. So if you're receiving another subsidy that's reimbursing you for those wages, those would not be eligible wages to claim under the subsidy if you're getting a reimbursement because of the definition. So I would say likely not if that's a reimbursement of the wage from another source. Another question just popped in. Is there any talk of this subsidy extending past June 6th? Nothing as of yet. The legislation does allow for the periods to be extended, so new periods to be added on by regulation. And what that means is that it doesn't have to go through Parliament and be passed again. So it's a lot easier for them to extend it if they want to. I think everyone's hoping that they don't have to, but the option is definitely there if needed. But nothing. I haven't heard anything that they've considered extending it yet. I would imagine we probably hear that closer to June, whether or not they would extend it. So as I mentioned with the revenue test, you do have to pick a method and stick with it. So you can use January, February 2020 or the month of 2019 in comparison, but you have to stay consistent throughout all your tests. So you want to be careful that you're choosing one that's the most appropriate for your business and that will give you the better chance to qualify for all periods. For new businesses, if you didn't carry on a business as of March 1st, 2019, unfortunately you're stuck and you do have to use January, February 2020 as your comparison. You don't have a choice. So I've been talking about this revenue decline, and so what is revenue? Generally, it's determined on an entity-by-entity basis, so similar how you would file a tax return. So just every legal entity has their own tax return and their own revenues. And it's accordance with your normal accounting practices. The definition that they provided is really it's amounts received or receivable from the sale of goods, provision of services, use of resources in Canada. That doesn't mean that you have to sell to Canadians. You can sell to the US or other countries, but the revenue actually has to be earned in Canada. So there needs to be some sort of operation in Canada. You really need to be paying tax in Canada to be eligible for the subsidy. Another big item that this excludes is amounts from non-arm's length persons. So a lot of corporate structures, there's multiple entities and sometimes there's charges between those entities in the same corporate group. For purposes of this revenue calculation, you have to exclude all related party amounts and just do your revenue decrease test based on your arm's length sources. There are situations where if you have more than 90% of your revenue from related party sources, there's some elections available that you can look to the other party's revenues. It gets very complicated in terms of the elections available and what you can actually do and who qualifies when you're not just looking at the individual entity. So highly recommended if you're in this situation, reach out to a tax advisor and have someone look at this in more detail to see if your particular corporate group qualifies. Another question's come through that if the employer pays $5 per hour more to encourage employees to report to work during these 3 months, is this $5 an hour pay not eligible for CWS? So that goes back to my temporarily bumping. I think based on the way the legislation is written, if that $5 per hour bump exceeds what they were making from Jan 1 to March 15th, and you do expect it to fall back down afterwards, then by the way the legislation is worded, it wouldn't be eligible for the subsidy. So I think the intention there would be that if employers are wanting to convince employees to come back to work, the government doesn't want to fund a kind of a top up. They would want the employer to fund that. That's just based on the way the legislation is written. Okay, just go back. One other election that's available is that entities can determine their revenues based on the cash method of accounting. So what that means is you really just take all your cash receipts for the month, compare that to either the average of January, February cash receipts or the 2019 month. And if you meet the revenue test that way, you can also qualify, even if that's not your normal accounting method. You don't have to produce revised financial statements. You just need to do this separate calculation for your revenues. And this is another one where if you elect to do this, you have to stay consistent throughout all periods of the claim. You can't go back to using the accrual method. So how do you apply for this? I just got a question here on the last comment, so I'm just going to take the question. It says the company revenue is not linear. It could be 5,000 in one month and 100 in the next. There's no seasonal pattern. Should that be an issue? So the way the legislation is written, it doesn't really take nuances like that into account. It's a pure take your March 2020 revenues, compare it to March 19 or the average of January, February 2020. If you meet the test, you qualify. There's no real other considerations other than just doing the math for those calculations. And if you meet the revenue decline test, you would qualify kind of regardless of whether your business is seasonal or not. That could help some businesses. It could also unfortunately hurt some businesses that are seasonal the other way. And unfortunately, the way it's written right now, there's nothing that would allow companies to do anything different other than the legislation and the formulas that have been introduced. So how do you apply for this? There's 3 ways. The application portal is now open. It was open on Monday. You have to have paid the wages before you apply, so you can only apply for the first period, March 15th to April 11th. Then once you've paid the 4-week wages for the next period, then you can go in and apply again. So you can apply through My Business Account portal through the Canada Revenue Agency. That's typically if you're a business owner, you can get access to that and apply yourself. There's a web-based application. This one's a lot easier. You just need a web access code that you can obtain through CRA's website. There's instructions on the CEWS site to go through and get that web access code so that you can apply. Or if you're have a representative like an accountant or an advisor that has authorized access for you, they can apply on your behalf. They do need to get a CRA form signed off from you that attests that you believe the conditions are met, and really the advisor is just inputting the information on your behalf. So there's a bit of extra work if the advisors are doing it versus the employer themselves, but something to consider that there are different options out there to apply. And you do have until the end of September 2020 to apply for this. So you can apply as early as possible as soon as you've paid the wages, but you don't have to. There's no rush. You can wait and apply for all periods at the same time if you wanted to. You do have to maintain records to prove that the revenue has dropped and the remuneration that you actually paid. There's no requirement to actually submit this documentation when you apply, but you may be asked for it in a subsequent audit. So CRA has released an Excel calculator. I highly recommend that you use this if you're going through the subsidy calculation. The link is here. I find it's easier just to Google CEWS calculator. It's usually the first one that comes up, and you can scroll down that page and there's a link to download the Excel. It kind of avoids you having to worry about that complicated formula, and you just type in the baseline remuneration, whether they're arm's length or not, and what you've actually paid them for the 4-week period, and it'll spit out the calculation of the subsidy. So highly recommended to use that if you're going through this process. It makes life a lot easier. So as I mentioned, the employers do have to attest that they have met the decline in revenue, and there is this form that's required if representatives are submitting it on their behalf. One of the things that they've mentioned and Trudeau's mentioned and it's been announced is that as you've seen, you don't necessarily have to pay employees what you were paying them before, and you can still get the full subsidy. As in that $2,000 example that we dropped the employee to $750, but they are encouraging employers to keep paying employees the same amount they were being paid before. That's not in the legislation. There's no requirement to do so. So the calculation of the subsidy is not impacted necessarily because you didn't pay the other 25% or whatever you've reduced it by. And the subsidy is taxable. So what that means is really you have your salary expense as usual because you paid the employees, and then your salary expense will be reduced by whatever subsidy you've claimed. So you don't have income on your statements, but you'll have a reduced expense. So you can only expense the actual amount you're out of pocket for paying the employees. A quick note on the penalties that are involved. Trudeau has said this multiple times, and they're kind of being very strict on this subsidy in terms of people who try to abuse the system. If a review is done later on and it's determined you don't meet the eligibility requirements, you will have to pay the full amount back. If after a review they've determined that you've tried to do something to artificially meet the test, so done something to manipulate your revenues that you really probably shouldn't have met that revenue decline, there could be a penalty applied of 25% of the subsidy, so quite harsh. If there's instances, things like fraud or negligence, and you're really just, you don't qualify, but you're applying anyway, and you're caught, the worst case is jail time. There could be penalties of another 50%, so you could be looking at almost a penalty of or repaying double what you got. So it's really not worth it to mess around with this. I think as I mentioned, as you've seen throughout this, the calculation is very complex. There are going to be some gray areas. So I think as long as you do a reasonable job at proving your revenue decline, having all the backup documentation, I'd like to think that they won't charge the penalties, and worst case, you'd be asked to repay it. But it's good to know that this is out there, just to make sure that you're not trying to do anything aggressive in terms of these subsidies. And the last thing is the minister can make applicants' names public. So again, I think they just want to say that they can publicly shame companies if they really wanted to, if someone's abusing the system. So that's it for the 75% subsidy. I'm going to spend some time on the 10% subsidy. Unfortunately, the way that the 75% subsidy is written into law is that if you qualify for this 10% subsidy, you don't have a choice. You have to claim the 10% subsidy, or if you don't claim it, you'll be refunded it later. And you have to reduce your 75% claim by this 10% claim. We've submitted some questions to finance as a firm in terms of do we really have to do this, because it is quite cumbersome. You have to do your Excel calculation for the 75%. Then separately, you have to determine if you're eligible for this 10% to reduce your subsidy. So it can become quite complicated in terms of the calculations that you have to do when really the same amount is being claimed, just in two separate forms. I think at the end of the day, as long as you're not doubling up and claiming both subsidies, employers should be okay. So I would say if you've already gone ahead and applied for this subsidy, but you haven't reduced it for the 10% and you were eligible for it, I think there has to be some sort of mechanism that comes out afterwards from CRA that you can reconcile and just make sure that you don't get double the amount that you're supposed to. But I'll go through this and just what the calculation is so that you're aware, and just so that you know if you do qualify for it, you should be reducing your 75% claim for this amount. This one is more restrictive. So similarly, you have to have had a payroll account. This one's as of March 18th. And you have to pay salary to someone after that date, to an eligible employee, again, someone who's working in Canada. The restrictive part of it is it's only eligible for certain employers. The main ones that are going to qualify here are Canadian-controlled private corporations that are eligible to claim the small business deduction. So that's the lower rate of tax on the first $500,000 of profit. There's some nuances there to the rules, but generally, if you can claim the small business deduction, you're eligible for this subsidy. And the way the legislation is written, if you pay employees during this period, even if you don't claim the subsidy, you're deemed to have gotten the subsidy, and CRA will reconcile this later and refund you the money. So it's not a choice. The 75% subsidy is elective and you have to apply. This one you automatically qualify for and deemed to have made the remittances. So just an example as to how this is calculated. It's 10% of the remuneration paid between March 18th and June 19th. And the maximum you can claim per employee is $13.75. And the most that an employer can get out of this program is $25,000. So it's important to note that the 75% subsidy is not capped. There's no reduction in what you pay for CPP and EI. So all this does is, the way you apply for this is you actually reduce your remittances by the subsidy, and you can only reduce the income tax withheld. If you don't do this, as I mentioned, it'll be reconciled later and you'll get the credit later. So just an example as to how this works. If you have 5 employees, they're each earning $4,100 that month. Total payroll is $20,500. Calculate 10% of that. So your subsidy for that month is $2,050. Over the 3 months, the total subsidy that you'd be eligible to claim is $6,150. If you look at that number, it's less than the $25,000 cap, so you're not restricted. And if you divide that number by 5, you're less than the $13.75 per employee, so you're not restricted on that cap either. There's a question, does a new hire who is laid off within the 3 months probation period qualify, or is it treated as a pump of pay? So if that's in reference to the kind of the anti-avoidance rule of paying someone more than they were before, that anti-avoidance rule applies if they have a baseline remuneration. So you used to pay them something before and you bumped it up. A new hire, if you've just paid them for those 3 months and then you lay them off, provided you meet all the other eligibility criteria, there shouldn't be an issue with including that new hire's 3 months wages in the period, even if you lay them off after the 3 months or within the 3-month period. You do have to be able to show that there's no 14-day period in that 4-week period you haven't paid them. And again, assuming all the other criteria are met, there shouldn't be an issue with that either. Another question coming in, is the temporary wage subsidy done only at payroll submission? So that is the way that CRA is encouraging you to do it, is that yes, when you submit your payroll and you pay your remittances to CRA or through your payroll provider, you reduce your income tax withheld by the amount of the wage subsidy. If you don't do that, CRA has said that a reconciliation or form or questionnaire is going to come out in the fall, and you'll be able to reconcile any amounts that you haven't claimed and make sure that you're refunded that money. So if you haven't done it, you could either start doing it on future payroll periods, or if it's easier, just wait until that reconciliation form and claim it at that point. But there is no separate application process for the temporary wage subsidy like the 75%. So that was really the meat of the presentation. The wage subsidy is extremely complex, lots of different rules. I do want to spend the last 20 minutes or so just going through the other programs that are out there, as I'm sure you'd be interested in those as well. Just briefly on the CERD that I have already mentioned, this program again has been out since the beginning. I think a lot of people are familiar with this already. This is the $2,000 a month payment. So this is available to anyone who has stopped working and are without employment or self-employment income for reasons related to COVID-19. This was the original criteria. It's been amended that before you could earn nothing, now you can earn up to $1,000 in the 4-week period and continue to be eligible for the CERD. It's important to know that that is a hard line. Unfortunately, the way the legislation is written, or the way that they've at least introduced this on the CRA's website, is that if someone's earning $1,001, you get nothing. If you're earning $1,000, you get the full $2,000 a month. That might be changed in the future, but as of right now, that's how the calculation is. It's available from March 15th to October 3rd, but you can only claim it for a maximum of 16 weeks during that period. And it's a similar 4-week period test like the wage subsidy, and you do have to apply for it before December 2nd. Another question came up about the wage subsidy. So the eligibility periods from March 15th to April 11th. If we have a different pay period, say from March 9th to April 5th, how is it to be considered? So you do have to revise your payroll and convert it to what someone earned for each week from March 15th onward. So even if your pay periods are different, you do have to look at what were they paid in respect of those 4 weeks that you can qualify for. And then you have to do a bit of extra calculations to get that weekly remuneration. There's no option to use a different pay period. Doesn't stop you from still getting what you're fully entitled to. It's just a bit more work because you have to convert your pay periods and only claim for the weeks that you're eligible for. This is one of the newer programs, the Canada Emergency Commercial Rent Assistance. This is still fairly new. It's not introduced yet. I have 2 slides on it with what we know so far. That this is pretty much it right now. There's been no legislation. There's still a lot that needs to be clarified here. So I'll go through with what we know, but there's still a lot of details that we need to know before we can kind of advise on this and decide who is eligible and who can apply. So this program is going to be providing forgivable loans to qualifying commercial property owners. So money is coming to the landlord directly. And the intention is that it's supposed to cover 50% of April, May, and June's rent payments for eligible small businesses that are experiencing financial hardship. I'll go through what those terms mean. Really what this is trying to do is that the government is going to cover 50%. The small business tenant paying the rent is expected to cover 25%, and the landlord is supposed to cover the other 25%. So it's kind of a shared burden between the tenant and the landlord. In order to qualify for this, this is what we know so far. The tenant themselves has to be paying less than $50,000 in rent per month. So it really is just for smaller businesses. On a consolidated group level, you can't generate more than 20 million in gross annual revenue. So again, small businesses. And you have to have temporarily ceased operations or experienced at least a 70% decline in pre-COVID revenues. Know that test is quite more than the 30% for the wage subsidy. And the revenue test is similar to the wage subsidy, where you can compare to the prior year, 2019, or the average of January, February. Again, no legislation on this right now, so I'm just going based on kind of the FAQ that's online. That's all we have right now. But it is quite a significant drop. So a lot of companies are not going to qualify for this because they haven't met the 70% decline. So it's like, I think that a lot of people that will qualify for this might be restaurant owners who are shut down or operating at a minimal capacity. A lot of other businesses, even if you've experienced a 50% drop, as of right now, you won't qualify for this. The rest of what we know, the landlord has to own the property, so kind of no sublease arrangements. Right now, properties that have mortgages are going to qualify. You will apply through your lender. They have mentioned that there's going to be an alternative mechanism for landlords who don't have mortgages on their properties. So that's good news for those of you who don't have a mortgage, who are a landlord. You may still be eligible for this. Further details to be released. Remember, the tenant is only paying 25% of their rent. You have to come to an agreement with the tenant that you will not evict the tenant for those 3 months that they're paying the 25% rent. The landlord has to have reported rental income on their personal or corporate tax returns for 2018 and or 2019. So it seems like brand new landlords that just started in 2020 won't be eligible based on this. I think the most important part of this discussion is this last point here. The CMHC is, this is where all this information is, that website there. I encourage you to Google CMHC CECRA. The government loves their acronyms. I think every program has its own fancy acronym. But there is actually, I've put my information in there. There's a sign up page on the CMHC's website where as soon as further details are released, you'll receive an email update as to what those details are. So I'd encourage, if you're a landlord, if you have any commercial property, even if it's within your corporate group and you're renting to a related party, again, not sure whether you're qualified because the information is not out yet, but I'd encourage you to sign up just to get the updates so you get them right away. And because this is all we know right now, there's a lot of questions that have to be answered. One of the questions that came up, do you know if the agreement must cover all 3 months or can it cover just 1 month at a time? The way I read it, it seems like it has to be all 3 months. Again, I'm just going based on what's on that CMHC website. There's no legislation, so that could change, but the way I read it is that it's for the full 3 month period, to be determined whether that's actually what it is once it's released. Timing for this on the CRA's website, they've said mid-May. CMHC just says, I think, details to be released shortly. CRA has said mid-May we should know more about this. We may have to wait another 2 weeks or so. But this could be another, in addition to the wage subsidy, could be some help if businesses can reduce their rent to 25%. Someone asked, what is included as rent? Unfortunately, I don't know the answer to that right now. I don't know if it would include things like taxes, maintenance, insurance, or if it's just the rent portion. I would encourage you to sign up for the CMHC's the website so you get the information as soon as I do, because we just don't know right now. There's still a lot of uncertainty. Okay, the last portion of my presentation, Just relating to the stimulus credit programs that are out there, so loans that are available that have been introduced as a result of COVID-19. So there's three main ones. There are a bunch of other smaller ones that different and each bank is kind of doing what they can to help customers. So I'd encourage you that if you don't qualify for any of these three, reach out to your banking advisor. I'm sure they're very busy right now, but get in touch with them. See what they can do for you, and see if there's anything they can do to help. It doesn't hurt to ask. But I'll go through the three that have been particularly released by the government in response to this. So the CEBA, the Canada Emergency Business Account, this is the $40,000 interest-free loan that is being offered, and the idea here is that it's to be used to cover operating costs, and they define that as non-deferrable operating expenses, things like payroll, rent, utilities, insurance, property tax, regularly scheduled debt service. You cannot use the funds to pay dividends or increase management compensation, prepaid debt that you wouldn't that you don't have a normally scheduled debt payment for. To qualify for this one, you have to have paid payroll. So this is a T4 summary for 2019 that has a T4 income of 20,000 to 1.5 million in payroll, and that's a straight cutoff too. If you're at 19,999, unfortunately, it's just right at 20,000. You don't you qualify. Under that, you don't, and above 1.5, you won't. Repaying the loan in full before December 31st, 2022 will result in 25% of that loan being forgiven. So that's really the big incentive. So if you repay 30,000 of the 40,000 you received before December 31st, 2022, you'll receive forgiveness of the other $10,000 of the loan. There's also no interest on the loan until the end of 2022, and whatever is remaining after that will be subject to 5% interest, and there'll be a repayment period determined. This one you apply directly through your financial institution's website. So whoever you already have your business bank account with, you can apply through there. This one, I believe almost all the banks are doing online applications only. You aren't able to call your advisor and apply with them directly. Some banks might be different, but that's what I've been hearing, is that you do have to go through the online process. A question was asked, there's also a program for startups. Where can we find more info? There was a program under the IRAP, I believe, that expired. The application to do anything with that was yesterday. So I think that is completed. There's on the kind of Canada.ca, the Government of Canada's website, there's a bunch of links in there for kind of financial assistance for businesses. And it's kind of focused on different areas. It's broken into kind of southern and northern Ontario, and it does go through some more details on other loan programs that might be available. So I think I would kind of start with the kind of Canada's government's website, go through there to see if there's any information on it, and then also just going through your bank and seeing what's available. There has been some news articles over the last few weeks that this CEBA account is restrictive to salary. So if you have a business owner that didn't pay themselves salary, they just paid themselves dividends, they're unfortunately out of luck with this program. So these articles have been talking about potential other entities coming up with more funds for kind of startups and people who don't qualify for this, so people who have been paying dividends. I haven't heard anything new on that in the last week or so, but as I've kind of been saying this whole presentation, things are changing so quickly that, I mean, by the time this presentation is over, there might be something new that's released. So I'd encourage you to keep checking, kind of keep attending these new webinars that pop up, because there's always new information and there might be something else that's released. They're trying to help as many people as possible, but unfortunately there's always going to be businesses that are not captured by what's released. So I think we just have to kind of hope for the best and hope that something new comes out, and kind of keep checking weekly, because there could be a program next week. this CEBA used to be for payroll between 50,000 and 1 million, and they've now changed that to 20,000 to 1.5. So things could change again. We're not sure at this point. The other two programs, I won't go into too much detail on them. They're larger loans that are available from the BDC and the EDC, and really to cover working capital. They're mainly for kind of existing businesses that were operating in kind of a good business that would receive a loan beforehand. Now they're struggling because of COVID, and they need some help to kind of maintain their working capital. I'd encourage you to look into these further if you are interested in them. This working capital loan program is offered by the BDC. There's information directly on their website for this one. This one does require a general security agreement and a personal guarantee by ownership. Just to note, I don't believe the CEBA, the 40,000, requires any sort of personal guarantee. And the rate right now is 3.3% on these loans, so fairly low for a business loan. A question came up that the company qualifies for a CEBA loan, but does banking with a credit union which does not offer a CEBA loan. So I believe the starting point is that you have to use the bank that you are banking with. I'm not sure off the top of my head which banks might allow you to apply without having an existing account, but I'd encourage you to check the big banks and see if there's any. I would think that you would be able to apply if your bank doesn't offer it, but I do know a lot of the criteria on the bank's website say that you do need an existing business checking account. I don't know any banks off the top of my head that are allowing it, but I would encourage you to ask around with the different financial institutions and just let them know your situation. I think the main reason for that is they don't want people shopping around, so getting denied by one bank and then going to another and trying again. So I think your situation is much more unique. So I'd hope that banks would be willing to work with you and get you the loan that you need. The loan is fully backed by the Canadian government, so they shouldn't have a problem giving these loans out as long as you qualify. So I encourage you to look into that further, just to see if any bank would be willing to accommodate you in your situation. The last program is kind of another working capital loan for small and medium enterprises. This one, it's from the BDC and the EDC, but it's actually being administered through the banks. So from what I've heard is the banks are kind of slowly getting this program together. Some of them don't have it offered yet. So this one would be reach out to your actual banking advisor if you're interested in this program. This one wouldn't be an online application. This is directly through your bank. Talk to your advisor, see if you'd be eligible, and see if this is something that could help. It's really just helping with loans for operational cash flow requirements for businesses that are suffering during this time. All right, the last, just a quick slide on kind of things to be considering if you're running an owner managed business or you're involved in one. From a tax perspective, what could we be doing during this time? I mean, there's government incentives that of course should be being claimed if you're eligible for them, and you could use the help. There's also some other kind of longer term income tax planning opportunities that you could look at during this time. Things like reviewing how owners are being paid in the business. There could be the potential to get something like the wage subsidy, or even the temporary 10% wage subsidy if you switch someone from dividends to a salary. Again, there's a bunch of requirements and that you have to have had a payroll account beforehand, so it might not work for everyone. But even just tax planning scenarios, if you pay an owner a salary, you get a deduction on your corporate tax return. If you don't have as much income this year in your corporation, you may not need that deduction, and it might make more sense to pay dividends. So a lot of different things to consider given what's happened. Investments, I'm sure there's a lot of investments that have capital losses now. I know the market has rebounded quite a bit, but we're still down from where we were. So maybe triggering some of those capital losses if you had any capital gains before. So just kind of managing your cash flow and seeing if you can take advantage of the decline in the market. Before you trigger any capital losses, there's also planning that can be done with capital dividend accounts. That's getting tax-free money to shareholders if you've realized things like capital gains in the past. So just alternative remuneration strategies that reduce the total amount of tax that's being paid, really just to manage your cash flow. Another one is considering things like an estate freeze. So as you may know, when a business owner passes away, they're deemed to have disposed of kind of their entire estate, including their corporate assets, so the shares they own. Now might be a good time to try and freeze that value and fix it at a lower amount if the business value is lower than it was in the past. So you're reducing your estate tax liability and kind of planning into a lower tax result for you and your family. Okay, that's the end of my presentation, and I think we're right on time. It's 11 o'clock. If you do have any more questions, feel free to type them in, and I can answer them after the webinar is complete, and we'll find a way to get those back to you. But thank you very much for spending the time with me and listening, and I hope that this has been valuable for you. And good luck, stay safe, and I'll hope to see you again soon. Thanks.